Hello, Warriors. Lowell, how are you? Haven't seen you for a while. Hope things are green. Hugo, Alexander, the team, good turnaround Tuesday. Add on a turnaround Tuesday, a full moon. I believe they call it the Aquarian moon. I have no idea why. Maybe because it's the age of Aquarius. Oh no, that was a while ago. Anyway, how you doing, team? And why don't we start off with the featured currency, Ryan?
Hey
Aussie
Dale.
didn't like Aussie didn't like what the RBA did, or what's the story?
No, the market's seeing that the RBA is it's sounding a bit more less hawkish. They still expect a hike rate, but they're looking at the data like everyone else, and just the tone was less bullish. The economy, it didn't actually move a lot over the announcement. All this has come this morning, where we've seen
Okay,
a bit of dollar strength coming in. It's trying to hold this 66.60 level. If it goes, we could be in for a bit of fun and games. If it breaks 50, I'm going to be out all my long-term longs.
okay. So critical day. We are making new lows. If it reverses here, it would maintain a divergence. I keep looking at euro action, and every time I get up, it's lower, and then as time progresses, it's not. Losses are shaved.
Yeah,
Consistent behavior of not wanting to give up anything, and that's
it's
not a bad looking candle either.
it's the central bank stuff in play, the divergence in play. You've got the Fed slowing to 25, you've got the ECB hiking 50, and the market now thinking we're going to get more 50s down the line. So that's divergence. I mean, you want to look at Aussie Kiwi again, you'll see the clear divergence between the RBA and the RBNZ.
You know,
Um,
yeah.
and
You
it's
know,
that, that
I look,
that's what we're
I
trading.
you know, I look at this dollar. I know it's not exactly symmetrical, but it's pretty close. And a lot of people, myself included, was looking for 105.70 or 106. There were some moving averages on the dollar there. But if we're not going to make a new high, if that's off the table, it looks like we're developing some type of descending triangle. If rallies keep failing and we put in one more lower high, not sure if this is it or it has more in it, but maybe you don't have to know. But one thing you do have to know is that there's problems with the dollar back under this 103.70 level. That's
Yeah,
going to produce at least 100 to the downside. This formation's about 110 points. So that would give you 260, back into this candle, this range here. So I'm not sure about the upside, but I think that at least we know now where the dollar could um, be in serious, where there'll be some air pockets. So that's my look at the dollar. It could still fill out quite a bit. If I just take, it depends where you draw the top line. Let's say I just draw it here. You know, it's got a little bit of a downward angle. Some people, might draw it here, and this was more of an important poke. But see, it's got that look of a descending triangle. I'm going to leave it
yeah,
here. And so, what is it? It's an indecision pattern, which is what's been happening in almost all the currencies. Uh, the trend has been this, the Aussie, and it got hit without that much risk off. Um, anyway, that's what I'm thinking. BOJ, when's that, guys? Should I bring
Friday.
K Friday? Okay, so the end, similar picture. Are we going to make a new high, or are we going to, put in a failing rally? It's not exactly like the dollar index, but there are plenty of similarities. So, maybe you draw it here, some type of major support level. And I guess it's all going to depend. It's going to have a double barrel on Friday with the NFP and the BOJ, right?
Yep, absolutely.
So, anyway, something like this. So you have a couple of descending triangles working in the currency complex, guys. So at least we have it identified, not knowing what's going to happen with NFP, BOJ. You know, maybe you don't position yourself until after the NFP. We'll have the BOJ before the NFP. So maybe that's a day that, you know, direction gets decided. Just a guess. And getting closer to where I'm going to be probing the gold market, you know, basically around this 1830 levels, what I was looking for. I think that'd be close to 61.8 back. It still has a better look than silver. But, you know, I've been talking about that. I thought there'd be one more high in the gold silver ratio. That looks to be on track for now. And this upper line's going to come in around 80, a little over 89. And, you know, if we don't blow out the divergence, it could end up being like a third drive to a top. And up there, I'll just look at where silver is and get long. So I'm not sure about the fibs here, but getting closer. You know what? When you look at this, I bet there's some eliticians who would say this is bearish, right? Just had little ABC, you know, 3 wave. You don't have 5. I don't know if you have 5 in gold. Not sure. I don't know how to count waves. Gold looks better. The RSI structure was better. But I'll go with silver when the gold silver ratio is up there. So that looks to be developing. Almost looks like there could be one more rally in the yen, the dollar, and this usually goes up with the dollar too. If you guys follow gold silver ratio, when it's going up, normally the dollar is acting good. When it's acting bad, it goes down. So those are my thoughts. The only thing I have a concrete plan on is looking to buy gold, and here's a miner that I'd like to buy in the next day, maybe today. Turn around Tuesday. Let's see, where is it? This is the one with like a 4% yield, 5% yield, so you get paid while you wait. It had a pretty nice correction. It almost got to 78.6. 330 is 61.8. So I'll be looking at, you know, BTG between 340 and 330. And then I like the way this one has acted recently. If you put up a daily, that means me. Well, if you guys put up a daily, you'll see this formation. I had this line drawn way before this decline started, and I would ask myself, I wonder if we could fill it out. And we had several tests of it. So, yeah, I mean, if you wanted to, you could trade it with a tight stop because it takes out 280. It's going to, you know, 260. And this is the one that I gave the big talk on with the monthly huge rectangle. And I'm going to try a pullback. I thought we could go to 287. So this one, compared to most of them, has only retraced 50%. There are some smaller ones I watch, like Orla. I know a lot of guys that know mining fundamentals like. Look, it's given up nothing during the big gold decline we had in February. It held. So, keep an eye on that one for relative strength. And that's it. That's my plan for today is metals reach some of these levels. I'll be going at least a third in. We'll see. And you know, you're wrong against 1800 in gold and the lows in silver and the recent lows in miners. If you're a trader, I'm accumulating them. So it's a level that even if we went to further fib level, I would add it's a more of a campaign trade. And to me, it's like, would you rather have your money in cash or miners right now? And I like to have cash, but I don't want to be all cash. And I think it's not a bad place to be with part of your liquid tradable capital. Um, that's about all I have, guys. I think it's going to boil down to Friday.
I agree
Unless
with
you,
you, Dale. Good morning. Good morning.
hey, I came in.
My base case is that Friday is a bigger mover than Powell.
Yeah,
Unless he springs a surprise, of course. The algos will dissect every word he says. But I was saying on the flow show as well, there's two things perhaps that are going to be real movers. Is that either if he leaves the door wide open or hints at a possible 50 BPs coming up, where the market is pricing it in where between 25 or 31 BPs now, or he says that the January payrolls were one-off and we will have to be carefully watch for any setbacks if he gives any dovish hint. But he's usually walking a very fine line. I don't think he's going to give the markets too much to chew on, but that's just my base case. And then we're trading the calendar this week, right? We've got Powell, then we've got the Bank of Canada coming up, then we've got the Bank of Japan coming up, then we've got the last, let's call it the last, not the last of the Mohicans, but the last big domino, which is the labor market in the US.
Yeah.
If that continues to stand, then I reckon US 10s at least going to be trading back above 4%. If the opposite happens, then probably break down through 90, and that's going to drag the dollar around.
Hey, and hey, good morning, guys.
Kman,
good to, hey, good. Kman, I tend to agree with you that Friday is going to be more of the mover, and maybe you can explain to our listeners why that is. Because today, I mean, this is, Fed Chairman Powell. He's going to be under pressure, and he's going to be taking fire from legislators, and which are going to obviously try to make a circus sideshow out of the whole thing. But why do you think that today? And I know what my answer would be to this question, but what do you think? Why do you think today is going to be more subdued?
Well, I mean, exactly because Powell is usually pretty apt at walking the fine line and not changing too much. Of course, we will have to always wait and see what's going to happen. I mean, the politicians they have their own program, right? So they are going to grill him whether it's one way or the other. You haven't done enough. You did too much. You're putting pressure on the economy. The other ones say you haven't cooled the economy enough. And again, it's going to be an algo move. But then I think at the end of the day, we'll have to really see if we break out at the end of the day, after he's done, if we break out of 390 and 398 on the US 10s. And if that happens, then we'll probably take some form of direction. But then as I've been saying, the labor market is really and surprising a lot of people. The big domino that keeps on standing and holds back people from being possible to call a weaker economy, and we are all data dependent, and the data will ultimately tell us where this dollar is going to go.
Right. Hey, Dale, do you mind if I take over here real quick?
No, Kman, I wanted to ask you one thing. What do you think the reaction would be in yen and yields if Powell breaks down and starts crying today?
Then you're probably going to go down to 133.70 in dollar yen.
I mean, just he doesn't have to bawl, but he tears up.
Yeah. I mean, but It's a good question, it's a good question, by the way. How much can dollar yen go down if Powell goes dovish? And I reckon, looking at the nervosity or the fickleness of the market, it could be actually quite a lot. Now, my question is as well is, if he stays relatively hawkish, are we going to go into the Bank of Japan bang on the 137 in the dollar yen? And that's another.
I think that's the bigger risk, and you're talking to somebody who's actually short. So
and you know what's you know how this market does it. You know, and regardless what people may think, but flows are there. There's going to be a bit of speculation ahead of the Bank of Japan, and I can actually see yen strengthen just a little bit, because the market is thinking, or maybe thinking, that the Bank of Japan, that Kuroda is going to go out with a bang, you know, and last meeting he can prepare the terrain and do something about monetary policy. So there's going to be probably in the sessions from tomorrow a bit of speculation that they may do something, and then come to itself all of a sudden reverse, and we're back at 137.
Yeah, if you guys didn't catch that during, like, you know, we've been talking about it here in the week ahead video. We have the last BOJ meeting, which will be Friday morning in Japan. Obviously, if you live here in North America, it'll be Thursday night. So that's good. Could be a big one. It's Kuroda's last. His last. Do you think he'll be wasted?
Perhaps not going into the meeting, but during his
I bet you he's got a few
release,
sakis in him. I could almost
during
guarantee
his
you
press
he's got a
release,
few
they
sakis
adopt
in him.
2016 what was it, at Davos, you know, being a bit loaded and with a big smile announcing that they abandoned YCC.
What a great front page it would be. Paul crying and Kuroda blitz.
Dancing on a table.
Unfortunately,
leaving.
Kuroda would not make headlines because that's like a common thing for him. But you know,
Oh.
we will miss him, and we'll miss his personality. Hey, you know, we got. First of all, I want to say that we've got, you know, just about 13 minutes here. I'd like to get everybody's best ideas. So if you are sticking around, or make sure you guys and gals stick around to hear our team's best ideas going into the FOMC today. But I want to real quickly, and I know you guys talked a little bit about it, Ryan, about the RBA. The RBA comments, I mean, look, they were dovish. I stepped in about 10 minutes after the headlines into the chat room last night. Here you can just here's the ForexAnalytix chat room. You can go and go back to last night sometime. Let me see if I can get back here. But I'm going to just read you some of these headlines really quick. This is, you can see this is last night. Well, somewhere. Let me see. I just was there just a second ago. Okay, here we go. Timing and magnitude of the decline in household spending is surrounded by uncertainty. You know, dovish. RBA board is attempting to bring inflation to the 2 to 3% target range while keeping the economy on track, but the route to ensuring a gentle landing remains limited. Dovish. You know, they also said the board anticipates that further tightening of monetary policy will be required, and I was like, market is just not convinced in that. You know, we had some traders saying, you know, want to buy the dip in the Aussie, and I'm like, hey, you know, we are breaking through flag support. This was the flag support last night. Hopefully no one stepped in front of that train, because, you know, obviously, you know, and then if you go to that was last night about 8-9 hours ago, but you can see then, you know, today that's the rest of the chat room from, you know, from then on out. And if you guys are not in the ForexAnalytix chat room, you can see how active it is. You know, now that we're breaking lower, I have to say that we are oversold. You know, we're at a 50% retracement. Over time, we should complete to get to 65.50. You know, but getting there is always going to be the trick, right? It's like, we know, or at least I'm confident that if I shorted the Aussie dollar and I just close my eyes, at some point we're going to make it down there. But that doesn't mean we can't make it to 68 cents first. You know, today, after some, you know, crazy testimony, before heading back down there. That's all very possible, especially if, you know, we get as Kman and Dale were saying, you know, if we get Fed Chairman Powell crying, buckling at his knees because he's so upset that these politicians are beating him up on the world stage. I'm joking about all that, but we can actually get some volatility today between now and the time this chart pattern completes. But just remember, the Aussie dollar has a couple bearish patterns that are pointing us in the direction of eventually testing the 618 retracement, which is 65.30. Now Ryan just did his trade-off show with Michael Brown. Do you guys film this morning? Is that when you filmed it?
No, yesterday.
Oh, is it yesterday? Okay. Last week I was looking at the Euro Aussie on our trade-off show that actually we'll film it tomorrow. And a lot of people are like, hey, I'm gonna short the Euro Aussie up here. I just want to reiterate that we've broken a multi-year trend line. I mean, this trend line really goes back to October 2020, and we're breaking out. And this butterfly pattern or crab or whatever you want to look at it is points to like 162 to 164. If we get a hint of risk aversion, you're probably going to be seeing those levels. So just, if you are trying to get on the short side of this, because I know most traders, right? Every trader feels that whatever instrument they're trading should revert back to the mean. And, and they never believe breakouts. But when you get a breakout of like this magnitude, you got to be a little bit more cautious with it if you are trying to fade it, because I read people trying to do it, and it just makes me a little nervous. With that type of like I said, that type of volatility. But let's go around and hear. Has Stelios even said anything today? Stel, or is he here?
Hello.
Hey, we haven't heard you all day. What are you doing today?
I'm doing fine. How are you?
Good. What's going on? What are you looking at today?
Well, first of all, I wrote a blog post about Powell and the NFPs later this week.
Did you put it in the chat box so everybody can read it?
I will put it now.
Okay, this is it, guys. So make sure you guys read that. It's free.
Yes, I've tweeted already. Anyway, before I put it, so my view going into Powell is that there still really isn't any how should I put it, compelling reason why Powell should change what he's been telling us for the in the past weeks and months. So a switch to something more dovish, I just don't see the reason why yet, because inflation is still high. The numbers, yes, some are disappointing, like consumer confidence and some PMIs, but overall, the main reason why the Fed has been tightening so quickly, inflation is still there. I think that is going to start dropping, but at the moment, there is no reason for that. So what do I think going into Powell? I think he has very, very little reason to satisfy the doves. So I think the risk is for Powell to stay as he has been, or even to to maybe sound a little bit more hawkish than previously, simply because the last CPI print dropped less than expected. So what do I think about markets on the back of that? It's difficult because the euro dollar is kind of in a range, in the middle of a range. So we're still quite far from, let's call it a breakout or a breakdown point. The one I'm looking at is dollar Norway, because it is now looking like it's going to be making new highs. It actually is making new highs. So this, if you want to be long the dollar, I think this is a nice, technically a nice pair. We have broken out like you have on your chart there, and we're making new highs. So it's looking pretty strong. And the other one that I am looking at, but again, we're not quite there yet in terms of levels, is cable. Because cable has been, if you look at it, if you look at the daily chart or 4 hour, whatever, it's just consolidating on what seems to be like a channel for the past month or so. And we're not quite there, close enough to the top and the bottom end of it. But cable is another one I'm looking at. So if you want to, if you have a view on there you go. So it's kind of wedging and consolidating into some kind of a breakout eventually. Yeah. But
2 weeks, we're not... 2 weeks. Even today, it tagged the top of the wedge and came off.
So that's another interesting one. Technically, really, really nice. Technically, you showed that yesterday, Blake. So those are the ones I'm looking at. But as I said before, I think the risk is for a kind of hawkish surprise, let's say, or maybe the market doesn't get the dovish talk that it might expect.
Well, let's explore that a little bit. And I know we just have a couple minutes, but I just want to say that, you know, here's going to be Fed Chairman Powell. He's going to be sitting in front of a bunch of I'm not going to, I don't want to be political, but I'm just going to say there's going to be a bunch of people. What's that?
Dildos.
Dildos.
Yeah, he's going to be under fire. You have to imagine every politician, the only thing that they hear in their home states is inflation, the price of eggs, the prices of housing, the prices of this and that. So they are going to be on center stage in front of the whole United States, absolutely drilling Fed Chairman Powell. And, you know, so his only response that he's going to have is, we are not going to quit until the job is done. I mean, that's it, right? I mean, we have to expect that he's going to be hawkish. And if you guys are expecting some sort of dovish Powell today, it's got to be a slip up. It's got to be during the Q&A. In my opinion, it's got to be him saying, you know, somehow say we're almost done, or, maybe the economy is starting to show signs of weakness. You know, it's got to be a slip up that he gets caught up in some sort of Q&A. In my view, because he is going to get absolutely hammered by so many politicians, and they're just going to rail him about keeping rates low and, and not raising rates too quick or fast enough. I mean, he is going to get destroyed today. And that's just my view. It's going to be a really interesting circus act that we're going to see. And some of the politicians, I'm going to sit here with popcorn today. I'm going to just really enjoy watching this, because it should be fun. But we are running out of time. We got just a few minutes. Steve, I just heard your voice. Steve, how are you doing?
Dildo woke him up.
I'm somewhat okay, although Dale is definitely improving my mood.
All right. Well, hey, Steve, I know you're kind of sitting on the sidelines here. You're recovering from having not feeling so well. But is there anything that's on your radar that people should be looking at?
I think there is no reason to believe that the dollar's rally is done. I agree 100% that I don't think that Powell is going to do any favors today for people that are looking for a weak dollar. Now, on the other hand, though, we can't dismiss the fact that equities are in the up and up as well. Theoretically speaking, these two things don't add up that well together, but that's what the price action says, and we have to respect it. So personally, I'm staying on the FX side of things because I can't find it easy to be long equities. But on the other hand, I don't want to be short, right? So I'm still of the opinion
this pullback in gold and silver.
The thing is, if you look at platinum, for example, that was doing well the last few days and what it's doing today, the thing is that since the dollar is not done, I'm not convinced that any of those have also bottomed, Dale.
Okay.
And if you think about yields barely moving and the dollar barely moving again today, metals just underperforming for no reason at all.
Yes.
So they're trading very weak. Very weak.
Which is not the first time we've seen that.
Silver makes a new low and gold holds a fib retracement. Gold puts in a higher low, and the gold silver ratio is at 89 or 90.
If gold puts a higher low, that is definitely going to be some kind of a bullish indication, right? Okay. But that's an if for the time being.
Yeah.
So
I buy ifs, and sometimes get run over.
Yeah. So let's first see that happen, and we take it from there.
Okay. Buddy. Okay. Are you under the weather still?
Yeah.
All right. Well, we miss you.
Go ahead, Steve. Thank you very much for your input. We're almost out of time. Ryan, what are your thoughts today? What are you seeing?
I don't know. I was done at dildos personally.
Come on, man. This is a
Most people
PG-13
are,
show.
man.
For crying out
No,
Christmas. All right, what do you see?
No change to yesterday. You know, we'll wait to see what these comments drop. They're due to drop any time now. You know, all the action is going to be in the comments of his testimony, and then, as you say, then we switch to the questioning. And
remember, like Ryan just said, the comments from his testimony should be released soon. But it's the Q&A that's really going to matter. Don't get all caught up when he's actually doing the testimony and you hear him reading off his testimony, because a lot of people will trade and they'll be like, and then we'll be like, dude, this came out hours ago. So just, heads up with that. All right. So I'm sorry. What are you looking at though? Give me some crackers to chew on.
Give you some crackers. Well, something. I'm short dollar yen. I'm long Aussie dollar. I'm going to be watching those positions.
You're long Aussie dollar. What are you like, standing in front of a falling piano?
No, I've been long Aussie dollar since October.
Oh, okay, all right.
In front of a falling piano is fine. You don't want to be under it.
Yeah,
exactly.
That's right. Sorry, it's early in the morning. Okay. And anything like actionable today, Ryan?
Me?
Oh, okay, never mind. All right,
I can't give you what I'm going to do until I know what's coming out.
All right, we have an excellent guest, guys, today. Come on.
I know Giles. He's coming up. Hold on one second. But I didn't get a chance to speak yet because I had to listen to everybody else. So hey, keep an eye here on the U.S. dollar, South African rand. We are approaching that daily trend line. Remember, this is a large, long-term cup and handle, and we get a hawkish pal, and people want to buy dollars. Just this sucker could really go. We are right up against resistance. We're within striking distance. I mean, this is the type of currency pair that moves 3-4% a day. So we're like, I would say, let's see here. We are about we're about 1% from breaking out, and then just a 4% from hitting the 127% extension. And if you trade the dollar rand, a 4% move intraday is not, anything to shake a stick at. And Kman, are you still here?
Yes, sire.
I know you're trading this on the long side,
yes.
Alongside with me. What is the political risk here?
Oh, the political risk?
Mm-hmm.
Well, still the lingering risk between with China and Russia, but Ramaphosa is trying to get his to do a reshuffle in his cabinet, but it doesn't seem the market is really on board with that right now. So I think it's more geopolitical, and still the ESCOM still wrestling with blackouts, etc. It's still a mess over there. For as long as the dollar doesn't turn around, this thing is probably looking up.
All right. Well, and just keep in mind, everybody's expecting a hawkish pal, but getting a hawkish pal and expecting one is still hawkish, right? So that's a dollar bullish type of outcome. See how stocks respond and yields as well. All right, Dale, thank you so much for guiding us today. Giles is coming in here. Giles, good to see you. Always good to hear from Giles. Ryan, Kman, Stelios, Steve. Good to hear all of you guys' voices. If you haven't checked out ForexAnalytix, today would be a perfect day to jump in because it's $1 for 10 days. During the PAL testimony, you can be inside of the chat rooms for the second day of the PAL testimony, and you can be inside of the chat rooms for the non-farm payroll on Friday. So it's $1 for 10 days. Download the mobile app when you do so. Dale, it's all yours.
Thank you, Dream Team, making it real. Giles, how are you?
I'm great, Dale. Great to be with you. How are you doing?
Good, buddy. Great to have you back. What's top of mind as we go into Powell testimony? And I know we haven't spoken in about 3-4 months. You excited about the month of March?
Yeah, I'm really much more excited about FX generally this year as we've seen growth differentials, interest rate differentials. It's really sort of come back alive. So I've been really, really enjoying it.
Yeah, there's more differentiation between the pairs.
Yeah, for sure. And it's just,
right?
Yeah, absolutely. And you're getting these short-term focuses on particular data points like economic data or inflation data. And so there's been a lot of short-term trading opportunities. So even though the bigger picture has been unclear, that's been quite helpful for short-term trading. So I've been really enjoying particularly economic risk events during the last couple of months.
Okay, what would you say the main time frame you've been spending the most time on and generating the most trades from? 4 hour? Hello?
Well, at least we can see Giles's charts.
Yeah, you can hear me, right?
I can hear you. Yeah, I can hear you just fine.
We can hear you just fine.
Yeah, here I am, guys. Sorry, I somehow muted myself. I don't know how.
Yeah, that happens, and we're gonna forgive you this time.
Good to see you, all right, buddy.
All right.
So I was asking you. You were saying that nothing real macro. It's a little bit more muddled, but lots of trading opportunities. What time frame are you spending most of your time on and generating trades from? The 4 hour?
Yeah, well, there's two sort of time frames, sort of the weekly and the monthly, and then the 15-minute chart. I found myself in those two extremes, either much bigger picture or very short-term trading opportunities, just sort of scalping between pivot points, really, on surprise data points like a surprise inflation print or surprise employment print, something like that.
That was a real nice reaction off that trend line Thursday in the S&Ps.
Yeah, and like that was really
follow through.
That was really interesting because I thought I'd just talk through this. Like, remember that very strong non-farm payroll print we had on the 3rd of Feb?
Right.
When we had that 517,000 print, and that was above the maximum expectation of like 300 odd thousand. So it was huge. And
it was an inflection point not only for S&Ps, but 10-year bottom, 353, and
you see it
gold bottomed 1804.
Yeah.
Anyway, okay.
And no, you're right, Dale. And you see it more clearly on the dollar index, for instance. So I'm just flicking over because you see that inflection much more clearly than the S&P 500 here. That on the Friday the 3rd.
Right.
And you just see how much dollar buying came in. Now the S&P 500 was in one sense seemingly slow to react, but it did top out that sort of 4150, 4200 region. And then we had the strong ISM data, strong retail sales. Then we had those two CPI and PPI prints, which although they were on trend falls, the month-on-month reading was high for both of them. And then we had the Fed's preferred measure of inflation, the core PCE print, which came in higher than expected. And I've just got that here. Let's just see it there. We had the core PCE print coming in on the 24th of Feb, with the headline coming at 4.7% above the maximum expected of 4.5. And that month-on-month reading again coming in strong, which was really interesting because we had the CPI came in strong month-on-month, the PPI, and then the Fed's preferred measure of inflation, the core PCE print came in hot month-on-month. And that's 0.6%, and the maximum expected was 0.3%. So all of that led to a repricing from the Federal Reserve, and now we've got a peak rate that's projected to be about 5.5% for July and the autumn of this year. And that's why everyone's expecting a more hawkish Powell. But the question that I'm asking to myself is, will he be hawkish enough? Because everyone's expecting a hawkish Powell, and I think a terminal rate expectation above 6%, I think the risk is he'll sort of disappoint markets. So when we had this turn of the month, you get this seasonal effect, Dale, of stocks tend to gain the major indexes from the end of the month, around the 26th to the 27th, to about the 3rd or the 4th. So I wasn't surprised to see this pick up, and I actually tweeted about it at the time, off that 200 moving average, that very large trend line. We'd seen a lot of stretched positioning, and now we've moved back up to today's prices, and then we're just hanging around waiting for Powell. So one thing that I thought might be helpful for your listeners is to explain why the Fed are so focused on inflation. And basically, there's this Phillips curve that the Fed are being informed by. And they have this belief that when unemployment is low and employment is high, that means workers can ask for higher wages, which leads to higher inflation. So in the Fed's mind, strong employment equals high inflation. And the vice versa is true as well. So
which is very far away from being true, by the way.
Yeah. So what I'm looking for Powell is maybe he'll start casting doubt on this Phillips curve idea. So maybe he'll start saying, well, maybe we can have a scenario where we have, low unemployment and it doesn't become inflationary. So I think one tail risk to look out for is if he starts distancing himself from this view and thinks, well, maybe we can have our cake and eat it, and maybe the Phillips curve is not applying in the way that we're expecting. Now, historically, this Phillips curve sort of oscillates quite a lot from this perfect kind of, model. But this is what's driving them, which is why their favorite measure of labor expenses is employment cost index. They want to see the labor market weakening to give them confidence that they're winning the inflation battle. So labor equals inflation in the Fed's mind. So I'm just wanting to see if we get some kind of distancing from him about that. So that's sort of what I'm looking for, and over today and tomorrow. And one thing that's interesting for your listeners is this: if you look at this semi-annual testimony over the last 15 years, from a seasonal perspective, the seasonal bias is for the S&P 500 to gain into the semi-annual testimony, the colloquial,
which it did.
Yeah, which it did, right? The Humphrey Hawkins testimony is the sort of the shorthand for it. And then to gain for the couple of days out of it. So that's over the last sort of 29 events in the last 15 years. So what I'm looking for here is, if I get a dovish Powell, I would use that for a short-term opportunity in the S&P 500, but it's an if. And the caveat for this, Dale, is if you look at it over 25 years, you actually see the opposite pattern over 50 events, up into the testimony and then down the days after the testimony. So, if he's very hawkish, but in my mind, very hawkish, he's got to push that terminal rate expectations over 6%, really, for that to be considered hawkish, considering how far we've come since that really strong non-farm payroll print that we got on February the 3rd, which topped out the S&P 500. So that's kind of my grid, really, there, Dale. I'm sorry, I'm conscious I've talked a lot. I'm sorry about that.
Well, you learn from listening. So my takeaway from you today, Giles, is you're going to hope that the market waits for you to get in after you decide whether or not he's hawkish or dovish. I'm just kidding you. But really the takeaway, and it's great, is at least we have some guideposts now for what would be considered hawkish, and that would mean if he talked a terminal rate over 6, and we should be on the lookout of him to start distancing himself from the Phillips curve, which would give him more latitude for employment to stay strong without tightening us into oblivion.
Yeah, that's it in a nutshell, Dale.
Okay. You have any view on gold? We had a nice bounce last week. We've given back about half. What do you think?
So with gold, I always look at the interplay between real yields, the dollar, and gold to get my bearing on it. So I haven't looked at gold for a while, but if Powell was dovish, that would be bullish gold. So I'm always looking at where the dollar is. So if we see a dovish Powell, I expect the dollar to fall. I'd also expect 10-year yields to fall. So I'd expect real yields to drop. So I'd expect that to be bullish for gold. So the same environment that we bullish for the S&P
Were
500.
they dropped? They weren't really dropping on that first wave up, though, Giles. That first wave up in gold, yields were rising.
Yes, but it's the
Weren't they?
relationship between the two. So
Okay.
what I like, Dale, is when I'm trading, is I like to see the dollar and real yields moving together.
Yeah. Okay.
Whereas if you see them moving in like diverging, like in December, you see how you've got real yields heading that way, you've got the dollar heading that way. You can, I still do trade gold, but the best scenario is when they're both moving together, that's when you get those real high conviction moves that I look for swing trading.
All right. So you're strongly neutral gold right now?
Yeah, but if I was long S&P 500, I'd also use that as a potential opportunity to get long gold.
All one market, isn't it? Okay. And it's all, you get the dollar right, you get everything else right.
Yeah, especially with all the focus on inflation right now and the way that the dollar and yields are going to be so sensitive to interest rate expectations. So it's kind of like the same, it's a different expression of the same narrative.
Okay. Well, talking to you, Giles, is like cash in the bank.
Well, you can break it down, you see, and once you know the expectations, that like I found that's been very good for like short-term trading opportunities. You know, yes, I can't see the bigger picture, but I can see what the market's expecting for the next 3 to 6 hours, and that's where I've been sort of trading recently, and I've been quite enjoying it.
Okay. All right. Well, really appreciate your views. A quick, I know the currencies, like you said, they've been pretty choppy. I mean, there've been some, Euro, Aussie, but just the dollar pairs. The tightest range I could remember in cable for many years, basically 400 pip range. Do you have an expectation as to what side of the range cable's going to come out of, or maybe both? Maybe we try the bottom first, clean out the longs, and then blow out the shorts over 24.50.
Yeah, that is a very tight range. I hadn't noticed how tight that range had got.
Yeah. What do? You put on a volatility spread where you buy puts and calls because there's a move coming one way or the other. You just don't know which way first. So
yeah, let's just have a look at that. Yeah, so you got this sort of coiling price action. You're right, and that's typically, and it's still in that sort of supply area from that January very strong hammer reversal bar. So this is we're still in very strong support around that 1.1200 regions. That would technically, that would be my first observation. We're in major support as we are, and then I'd be using the dollar as my cue, because there's been a lot of negativity priced in for the pound, and any sort of good news for the pound will be very sensitive to good news. So if I had a strong reason to short the dollar, then I would trade the pound. And I could tell you a little technical tip that works very nicely, is when you have these sort of very coiling price actions like this, what you could do is just draw that trend line across the top. Now, I know technicians would say that's not a trend line because you haven't got 3 touches. But what I found, Dale, and this is particularly if you've got a strong...
Technicians will, Giles, just not technical anal-ists.
Yeah, well, to be fair,
some
Dale,
people get pretty anal about TA, so anyway.
Yeah, I know. But, when people want to get it right, I can understand the heart behind it. But what I've noticed is if you combine this with a strong narrative, so even though there's 2 touches there, the fact that these are swing points, and this will be obvious to anyone who spent any time today.
You can't be short cable over that.
Yeah, I mean, you can see these little candlesticks, and if you just draw a line across the top of those swing points, with all that selling you've seen there, if price breaks back above that trend line, it'd be really significant. So if I was thinking, I want to go long cable, I would look at it 2 ways. Either I would buy and put my stop underneath 1.1900, say I'm in key support, or I'd wait for a breakout of that 1.2100 region. And if I break out of 1.2100, I'd stay with it as long as I keep above that trend line. But I would need a negative US dollar story to do that. So I'd need to see some kind of peak terminal rate signaled, or maybe say a real big miss of the non-farm payroll on Friday. So say, for instance, if we got along to Friday and we had the headlines expected to come in at 200,000, I think. Yeah, so you see the headlines expected to come in at 200,000, down from the prior 517,000. Say it came in below 100,000, and say the average hourly earnings also came in 0.2%, ideally below 0.2%, and say the participation rate was 62.4% or better, and say the average hourly earnings also fall below 4.4%, then that would be a great opportunity to go long pound US dollar. And I would expect that technical pattern to break. So I would expect that to break out on that kind of print. So that's what I'd look for. Or, as you say, Dale, if Powell is more hawkish today, we might get a bit more dollar strength. So then you might get the pound moving down, and you could get a sort of false break of this 1.1800 region and then get a snap back higher. So I'd be looking at either buying at 1.1860 if we saw a hawkish Powell. I'd buy from this area here. Then markets would be likely to sort of move back into the range awaiting the non-farm payroll. And then if you've got a weak print, you might push higher. So if someone put a gun to my head and said, how could you make money from this structure? They would be some of the ways that I'd be looking at, but I'm not doing any of them. But that's what I do.
Okay. All right. Best way for people to follow you, Giles?
The best
contact
way,
you and
is just come along to the HYCM blog.
okay.
And I put like lots of different information up there every day, central bank stuff, risk events. And that's the only sort of avenue of contact that I'm allowed to share with my compliance, unfortunately. So
Right.
I'm not being
Okay.
I'm not being evasive.
No, I know you want. I know you like to share your insights with people. So
Yeah.
that's how you find Giles and what he's thinking. And once again, Giles, I appreciate you coming in. Kind of before, we say this every week. This week is critical. It does feel like this week is going to tell us whether last week was real or not.
Yeah.
So,
Absolutely. I think, it really is. It's such a critical week. But there's one thing that I keep coming back to, though, is the Fed's going to still peak at some point. If it's not now, as in the summer, it'll be a little bit later. So in one sense, you don't want to get too much caught up in the hype. If you take a longer term view, the Fed pivots. It's a question of when, not if.
okay, that's the art of it.
Yeah, that's the timing of it. But
yeah, that's the art of everything that we do. Is the when. All right. Well, I look forward to when we get together again.
Yeah.
Down the road, Giles.
Yeah, it's been great, Dale. Great to be with you all. And thanks for having me.
Yeah, have a great spring trading season. And
thanks.
And keep in touch on Twitter, and really appreciate you coming in and giving us a couple of guideposts for us to kind of fit in to what Paul says today. Yeah, you don't think he'll cry? You don't think he'll break down and cry or anything today, do you?
No, I just think he has to be more hawkish. But even a hawkish Powell, I don't think that's necessarily going to be a surprise.
Okay. All right. Everyone looking for the same thing. Giles Coughlin, everybody. Thank you, buddy.
Thanks. Yeah, cheers, Dale. Take care now. See you, everyone. Bye.
All right. That's a wrap, everyone. You follow Giles on Twitter at Giles Coughlin, and he has some letters afterwards, some type of designation. And to join the team in 21 minutes for the morning edge, so that you're ready with levels to trade Paul's testimony. Good luck today, everyone. Good hunting, and don't just count your pips, count your blessings. Have a great turnaround Tuesday.